Welcome to MarketTamer.com. We're looking at charts of the indexes right at the close on Monday, June 15th, and what we see is a correction down 2.38% in the S&P 500. In percentage terms, that is significant. Technically speaking, it is not reason to be terribly concerned right now. Why do I say that in spite of the big move in percentage terms? Well, while we are seeing a move down in points, we are seeing a move down in the 5-day moving average. We're also seeing the 20-day moving average hold as support. It's held back here in May a number of times. It held back in April. It held in March. And the question again is, will it hold in June? And there's no reason for us, again, to counter the trend and trade against it until the market proves that that is a prudent thing to do. And as a result, we're going to hold firm here, stick with the trend until it shows us otherwise. If we look to the other indexes, we see similar behavior. Again, the 20-day moving average held on the Dow Jones back in May, April, and March. It's holding once again here. What's interesting about the move in the Dow is it only moved down 2.13%. If we contrast that with the NASDAQ, which moved down 2.28%, what's interesting is that previously the NASDAQ was outperforming to the upside. It was also outperforming to the downside, and by that I mean it was not moving to the downside as much as the Dow Jones. Here, this is one of the first days we've actually seen in recent history where we've seen a bigger move to the downside in the NASDAQ than in the Dow Jones. That being said, it's still holding above its 20-day moving average, even better than some of the other indexes, so we're not terribly concerned. The volume is not really concerning us right now either, but we are obviously going to keep a very close eye on this. If we were to see the 20 days start to turn over and the price action go below that level, that would be a significant break below support. If we move on, we can see that some of the bellwethers have actually led this decline. We can see Google, for example, has been down for the past about 6 days or so, maybe just, about 6 days, I think. And we also see that similar action in Apple, which has followed a similar trend down about 6 days in a row here. But note that in percentage terms, Apple is down about 0.64%. If we look to Google, it's down 1.9%. Again, both relatively outperforming the indexes. The key index here to compare these stocks against is the NASDAQ. It's outperforming both. The conviction to the downside is not significant. Yes, we have moved down, but the volume, again, is not excessive. The moves are not so substantial that they're causing great concern for us right now. And so we'll just keep a very close eye on 20-day moving averages. If the 20 days start to break, then it's time to be much more aggressively bearish. Until that time, there is no reason to look to be aggressively bearish. Perhaps one of the most interesting stocks to look at right now is GLD. If we look to gold, what's happened? Well, take a look at this action here. This move down here, a move back up, then we have the move down again, move back up, significant level, and again here we have a correction. And so this is essentially an inverted head and shoulders pattern. You can see the first shoulder here, and we have the head here, then we have the second shoulder, and if we look to potentially an area of support, it would be right across this region here, somewhere between 90 and 88. That's potentially a first target here. We're actually pretty close to that right now. And if that level is reached, we are not expecting a significant break below that level at this point in time. In fact, we would be surprised if GLD did not reverse back higher. If it reverses back higher, we might expect it to go all the way back up to this level again, right around the 100 mark. That's $1,000 an ounce on gold. And if it gets there, we would anticipate that there's a very high probability of a breakout substantially higher. So we'll be keeping a very, very close eye on GLD. It is a really, really interesting position right now to keep an eye on. With that said, we look forward to seeing you at MarketTamer.com. Please don't hesitate to ask questions.